Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Josef Schachter, founder of the Schachter Energy Report online at schachterenergy.ca. He's speaking to us from Calgary. Welcome back to the show.
My pleasure to be with you again, Jim.
We have all kinds of things happening. First of all, the price of oil is still holding up. It hit $80. Is it going to stay in that range for any decent time?
Yeah, Brent got up to 80, and we were 76, 77 for WTI, and the view has been, of course, we've seen electricity outages around the world. A lot of it relating to renewables, wind power in the North Sea and in many places in Europe not working with lack of wind. So renewables aren't as consistent as the backers believe. And at the same time, we've had a problem delivering fuel products, petrol, diesel, gasoline, from the refineries to the local petrol station in the UK particularly. Again, it's the shortage of drivers. After Brexit happened, the Europeans went home and had to leave the country. Now they're talking about allowing 5,000 back in to help with the petrol deliveries. And there's been an announcement yesterday, I believe, that the British government is going to mobilize the quartermaster for the military delivery capability to supplant that and make sure that the product gets delivered to the stations. In the meantime, individuals shopping are limited to 30 pounds per purchase, which is not very much to go driving anywhere, and they're limited to that one per day. So we're looking at specific bullish reasons. And OPEC's meeting on Monday, the 4th of October. They're talking of just increasing 400,000 barrels per day as planned. You've got pressure, though, in China from the Chinese government to its industry refiners to buy up as much as they can all around the world. And you've got the president of Xi and President Biden all putting in calls to the king and the crown prince at Saudi Arabia saying, open up the spigots. You guys have 5 million barrels you could bring on tomorrow, and we want to see that on. And so the countries that can bring on immediately, 3 to 4 million to get to that 5, Saudi Arabia would be 2 to 3 of that. Kuwait, UAE, and Iraq all could bring on another 2 million, and that's not taking into account even a deal with Iran that could bring on another million fairly quickly. So we're not running out of oil and crude oil. What's happening is there's tight inventories right now. We're past the summer driving season, but with the blackouts because of wind power, there's a short-term shortage. So I would look at it and say fair value for the price of crude is about $60 to $65 for WTI. Anything above that is speculative in nature, hoarding, and commodity futures funds and others running the price up. You've got Goldman Sachs running around with 90. There are a couple analysts on the street talking about $100 oil before the end of the year. I'm not in that camp. I believe we're going to see weakness. I think part of it is going to be the Evergrande situation, supply chain issues. You've seen the announcement by Bed Bath & Beyond today that they can't get the product in the stores. Their revenues are going to go down. Profits are going to go down. Federal Express said the same thing, that there's problems with labor and shortages. So we're looking at a slowdown in the economy. You might have seen U.S. consumer confidence fall sharply. I think it was a record decline in terms of the last month. So we're looking at a short-term problem where everybody's getting excessively euphoric, and yet the indicators from companies, governments, the industry, refiners, is that heading in a month or two, this is not going to be a problem. and OPEC is under the gun to help alleviate it, and I think they will. The pressure will be getting so overwhelming to them that I think we're looking at, the price of crude backing off. I think we're going to break 70 early October, and in Q4 I think we break $60 WTI. So this euphoria that we're seeing is excessive. We write about that in our Ion Energy product, and if individuals want access to it, just go to the SchachterEnergyReport.ca under our subscriptions, and they can subscribe to Ion Energy for free. One last point I'd like to make is that the view of the bulls is that we've had drawdown every week. They were expecting a drawdown this week of commercial crude stocks of 2.5 million barrels. It was an increase of 4.6. And what happens normally is during the summer driving season, you have withdrawals, of course, because refiners are creating product for the summer driving season. And then in September, October, November, you have inventory builds to prepare for the winter grades that are needed. And the highest demand period is winter, December, January, February. So that increase was more than normal of 2 to 3 million at 4.6. And it would have been even higher by another 890,000 if not for net imports. In other words, the normal imports the U.S. makes was down by that amount. So you would have had a higher, if the imports had stayed stable, you would have really had a number closer to 5.4 million barrels on the week in terms of a build. The other 2 points I'd make, U.S. production volume went up by 500,000, so the hurricane season is effectively over. Production is 11.1 million last week. The high before the first hurricanes was 11.5. I think in the fourth quarter, with all the aggressive drilling that's going on in the States, especially by the private companies, which aren't having the shareholder approval or pressure like the public companies, we will be at 12 million barrels of oil by the end of the year. So you have 900,000 incremental coming from where we are today from the U.S., of which probably 200 to 300 is more hurricane, reversals, and the rest of it is going to be new growth. And the other point to make is U.S. consumption last week fell 754,000 to 20.4 million barrels. So we're having weakening demand, which again is normal at this time of year after the summer driving season is over. So you had increase in production, increase in storage, and lower demand. Those are all negative for prices. But because of the rhetoric, because of the hype, we're sitting up $10 higher than I think we should be. But again, if this market comes down, the general stock market gets beat up, and we've had 2 big days of more than 500 points down during September. I think in the next 2 to 3 weeks we're going to see a couple more, and I think we're looking at a market top that's in place. And I think September has been nasty. October I think will be extremely nasty. I think there's a chance that we break 30,000 on the Dow, and we're about 34,000 right now in October. And I think in the first half of 2022, because of all the problems politically, because Biden is going to be having a tough time with the midterm elections, with Trump running around trying to knock off all the anti-Trumpers, and also historically in the midterms the party in power loses 40 to 50 seats. That Trump will be in the driver's seat on impacting Biden's programs, as we're seeing now with all the issues here of getting the 2 bills passed, the stimulus bills. And so I think we're going to be looking at a very difficult time. We also, of course, have the debt ceiling issue. And I think the Evergrande situation is going to impact banking around the world, investors around the world, and it could be the tip of the iceberg. If you remember in 2007, 2008, when the financial crisis was in its early stages, everybody throws around the Lehman event. Well, the first event wasn't that. It was the banking systems in Iceland and Ireland that got into trouble. Then we had Bear Stearns, which the Fed forced J.P. Morgan into a merger on. And then we had the Lehman event, and the Fed said we're not helping anymore. And that's when the waterfall occurred in the market. I think we're looking at multiple disasters in China between the banks and real estate firms, and there are a lot of counterparties around the world. One of the things to note on the counterparties is when banks lend to each other, they put up collateral, and they do it to each other, and then only when there's tough times they go to the repo market at the Federal Reserve door. Well, the Federal Reserve is now doing double the repos that it was doing just weeks ago, and we're talking, I think, $1.5 trillion a night. So we're already seeing the banks nervous about dealing with other banks in the U.S. So while everybody thinks about Evergrande being a China problem, it's now developing into a worldwide problem, and that's why I'm in the bear camp here. I think we're going to see a significant correction, not only in the general stock market, but in the energy securities, partially as I think the energy prices come down from the lofty levels. But if the general market comes down, you of course have margin calls, and you sell what you can, not what you want, and then every market gets hit in the liquidity crisis.
Do you find it ironic that you have President Biden asking Saudi Arabia to turn on the taps, yet the first thing he did as president was cancel the XL pipeline?
Nuts. Absolutely nuts. You're saying he's saying I'm doing it for climate change, and yet so you're saying to the Middle East players, you screw up and ruin your environment, and we're going to clean up ours. And yet the biggest problem is China and India with the number of coal-fired facilities there are. And I would give China credit because they're already trying to cut electricity use and shutting coal plants and industrial plants in the Beijing area, because February 4th to the 20th, I believe, is when the Winter Olympics are in Beijing. And if you look at maps or you look on, turn on Google and say, okay, what's the air quality in Beijing today? It's horrible. And so they want to clear that up in time so that, number one, air quality is okay to have the event and have the sports activities, the outdoor activities, but more importantly, it's an imagery thing for China. So my expectation is that demand for fossil fuels in China will come down because industry will be made to shut down. And of course, if industry shuts down, the demand for fossil fuels goes down. China's imports of crude go down after this little short-term, hiccup. Where there's a need in the near term, but you're already seeing announcements that suppliers to Apple and to Tesla have been forced to shut down, and so therefore we may start seeing negative comments from them about delivery issues, and that's going to be problematic going forward. And so if you start seeing the FANG stocks announce difficulties in their supply chains, I think that will be disturbing to the stock market as well.
We'll have more with Josef Schachter right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Josef Schachter. Joseph, with Europe in an energy crisis with their wind farms not producing power, we've seen almost a dozen energy companies there go under from this crisis. They were relying on natural gas from Russia, but for some reason the Russians just won't turn the taps up higher. Wouldn't the Europeans love to have access to Canadian natural gas in some way?
Well, if we had a way of delivering it, I think that would be possible, but there is that problem of delivering. We don't have a pipeline east. And so what we're doing is we're shipping our gas through the systems that TransCanada and Enbridge have to the Gulf Coast. And they're going to then, the Gulf Coast, players like Cheniere and others are raking it in big time. Fabulous profits are going to be there because they're going to be selling LNG around the world. The issue with Germany is Germany has not only not brought on the Nord Stream 2, which they were supposed to bring on, but they've cut back some of the current deliveries to Europe, just like we've seen in the past with Ukraine and Poland when Russia wants to, be saber rattling against those countries. And the issue is that the German election did not have a clean winner. And the Green Party are sitting there as the crown makers, the king makers, and they are against Nord Stream 2, and so the Russians are saying, well, if you're not going to approve Nord Stream 2, we just spent all these billions of dollars, we're going to put some pressure on you. So we're not going to give you as many deliveries, and if your wind power is not working, you're really going to be snookered, and come back to the table, and the Green Party are going to have to eat apple pie here if they want to get into power, and this is one issue they're going to have to back down on. It may take some time because, Chancellor Merkel is in charge until a government is formed, and she is pressuring for Nord Stream to go through because she believes it's in their long-term interest, and she thinks she's put in protections for Ukraine going forward. So I don't know when the answer comes that Nord Stream 2 comes on. I think it's a when, not an if. But in the meantime, you're looking at $20 U.S. and MCF in Europe for natural gas spot contracts or spot access, and we're looking at a horrible price in Asia of $30 U.S. And in the meantime, we're looking at prices like $5.82 U.S. right now. I think it's up 40 cents today in the States. And in Canada, we're looking at AECO of $4.41 per MCF, which is a fabulous price for September. I don't believe I've ever seen a price like that in my 50-year almost career. Usually that kind of price is winter or winter when, of course, extreme cold weather in Canada and in the States, or when you have extreme demand for air conditioning usage in the peak hot days in the summertime. So we're sitting in moderate weather here, mid-teens in Alberta, and you wouldn't be thinking you'd be using a lot of natural gas for heating your home, and definitely wouldn't be using it for air conditioning. And yet we're looking at these very robust prices, which are why the natural gas stocks have been the best performers. Our focus, even though we're now bearish, is on natural gas, and on our action alert buy list, we have natural gas stocks, and those stocks have done extremely well in the next, over the last 6 months. I think they'll probably back off, so we're holding off saying buy at this point, because we think if the index, which is trading, in the 140s, backs off to 100, which is, I think, the target I have for later this year, early next year, that would be a negative for almost every stock on the TSX in the energy sector, from the biggest CNQ, Suncor, to the Tourmalines, to the Precision Drillings, even to the pipeline and infrastructure, Enbridge, TransCanada, etc. So I think investors who have made some awesome money from March of 2020 should be taking profits, have some cash on the sidelines, because we're going to go from extreme bullishness probably to some fear, and from greed to fear, which will give you another great buying opportunity at some point in the future. And we'll be highlighting that in our subscriber reports that we do going forward.
How do we get Western Canadian natural gas out to the world?
Well, in 2024-25, we're going to be having the pipeline, West Coast Pipeline to LNG Canada, which will start up in 2025, I believe, and they'll be filling gas in that line way before that. They can twin that line. There could be a second train up in the Kitimat area. There could be other projects that go forward with First Nation support. So, before the end of this decade, we will probably have one or two in establishment and many more potentially being built. But what's probably likely is, given some of the problems with the environmental footprint of them and the First Nations opposition, is my guess is that we're going to have a corridor from northern Alberta going north, crossing over to Alaska. And Alaska, on the north slope of Alaska, there's a lot of stranded natural gas. So they would build a pipeline next to the Alyeska oil line, and then between Canadian natural gas and Canadian oil and the natural gas potential from North Slope and the oil that's coming down already, that there could be facilities in the southern part of Alaska to take oil and natural gas to market. And I think that's going to be something we may see movement on in the years ahead.
Joseph, thank you so much for chatting with us.
My pleasure as always, Jim.
My guest has been Josef Schachter, founder of the Schachter Energy Report online at schachterenergyreport.ca. He was speaking to us from Calgary. If you have any questions for Joseph or any of our other guests, we'll ask that question for you if you send it to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HouseStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.